inflation does appear to be slowing down. In the past 30 minutes, the latest July inflation report came out. It shows prices in July were up 8.5% from a year ago, but that's down from the 9.1% we saw in June.
So this is good news after June marked the highest rate of inflation since the year 1981. Economics correspondent Bianca Ficini is going through that report this morning and has more details. Bianca, 8.5% is still a pretty high number, but it's not as bad as last month.
Hey guys, good morning. That's correct. Not as bad as last month, which means we can all breathe a little bit easier now. The latest report showed on a monthly basis, inflation actually remained unchanged at 1.3%. So we didn't see inflation grow at all on a monthly level. And then, of course, on a yearly level, 8.5%, both better than expectations and emphasis on being better than the previous report, which set a record 9.1% year over year and 1.3% month over month. Now, just some other numbers to throw quickly out. Gasoline index fell 7.7%. Energy index fell 4.6%, but the food index continued to rise, increasing by 1.1%. So overall, pretty good report. I'm sure, just hearing that inflation is starting to fall will probably provide some relief to consumers out there that have been, understandably stressed about all of these price increases for a really long time. This does show that inflation could be peaking and hopefully will continue that downward trend. But there are a couple of other things to keep in mind here. It was just last week that we got a really strong monthly jobs report. And in a normal scenario, which is not what we've been in over the past 2 years, adding 500,000 jobs and seeing some wage growth would be a good sign. But in this scenario, it's not exactly showing the slowdown that the Fed wants to see. The whole point of raising interest rates is to slow things down so hopefully prices fall as a result. So because of such a strong jobs report that we got, it means that further interest rate hikes could be in the future and that it might actually take the Fed a little bit longer to cut those rates back. So from a consumer perspective, some prices falling is, a good thing and something to celebrate. But if you're looking to make a big purchase, like buy a house or a car or maybe start a business, the price of those loans because of interest rate hikes are still going to remain a little bit elevated. So just something to keep in mind. But the Fed doesn't meet again until September, and that's when we'll get the next update on interest rates.
All right, Newsy economics correspondent Bianca Ficini, appreciate it.